Oh, hello, everyone. Welcome to the bloodbath of the week. Got my man Shy here. Let's talk about it. What are you seeing? What are you thinking? And is there anything you like in this sea of savage violence?
Listen, we're surviving. That's all you can do right now in this kind of flush. I want to say, like, there is something I want to say, but I first want to start off with this is totally normal. Like, yes, it's been really aggressive the past like 2 or 3 days, but like, you don't want another Q1 for Q2. Like, that's when things start getting frothy. So before that happens, like, yeah, everyone was like praying for the SPY to hit the 50-day, for the QQQ to hit the 50-day. But guess what? Now it's below it. Nobody wants to touch it. That's just how the market psychology works. So that's why Austin and I always talk about, like, write your game plan, have a game plan on paper. So when things do get so chaotic, like it's been the market right now, you know what to do and you won't feel emotional about it. Right now, you're seeing a ton of emotions of like, is the AI bubble popping? Are we about to correct, get into bear market? No, this is just market mechanics. Specifically, if you want to get into it, here, let me share my graph. Whoops, why isn't it
Yeah, I'll
working?
remove that. You go ahead and pop that in there. Share your
Yeah,
screen.
I'm gonna do it right now. Share screen. It's lagging. All right. All right, so right here. Oh, that's a Tesla chart. We'll talk about a Tesla chart later. But for SPY, this is not good action. I fully agree with everyone who's been saying, like, this is 2 weeks ago, Austin and I talked about 21-day EMA for SPY. That's a massive, massive trend line that we need to follow. Like, absolutely vital for the party to continue. 2 weeks ago, this is the NFP print. That was like, whoa, that is a really bad print. Austin and I, the next day, we talked about we need to hold this 21-day EMA. If we don't, things could get. This is a new character
Hey,
change
real
on the
quick, I
market.
don't see your chart. Let me try to remove it. Add it. It's like blank.
You don't see it?
No,
Let me present it again.
you're also still frozen.
Oh, I know what happened.
Please stand by. Technical difficulties. We'll be with you shortly. Yeah, this flush was ridiculous. Absolutely ludicrous. Right down to our level 494.80, almost on the dot. No, I believe it is on the dot. So, for those of you that have been following my Monday stream, this should be really no surprise to you, to be honest, because at the end of the day, we've mapped every single one of these levels out. So I hope that at least to those of you following the Monday stream, this is absolutely no surprise, because again, we've mapped each of these critical levels highlighted by these darker green lines from 507. We aim for 499. Below 499, we aim for 494, and so on and so forth. Let's get him back in here. There, he seems a lot
Let's
cleaner, a
go.
lot clearer. There
Nice.
you go. You want to
All right,
pop that on here now? Give it a
let me
shot.
share my screen. All right, let me know if you can't see it still.
Now we can.
Beautiful. All right, so I was talking before, like 2 weeks ago, Austin and I jumped on the spaces on April 5th. Actually, it was our first space we did together. April 4th was the NFP ugly daily candle. I was like, all right, this is a major, like, we need to follow through a bounce back next couple of days, or it's going to be character changing, because this 21-day EMA was the trend line that we had to use for 6 months in the rally. So this NFP print, like, okay, we crossed it. We're hovering around it. Tomorrow's a major day. The next day we went over it. But you can clearly see this was a character change in the market rally we've been on, and we're going to slightly correct. We noticed that right here, where now the 21-day was a support, it can easily flip to resistance, and that's what we're seeing over here. So clearly, next one we're talking about is 50-day, where we haven't even touched it for 6 months. That's how much of an insane rally we've been on. So now we broke the 21-day EMA. And when we tested a 50-day EMA, it wasn't even a test. We sliced through it with volume. You see this candle right here? That is not that's a massive red flag. So knowing that happened as well, like no resistance at all, just sliced through it. And it was within a week. The 21-day EMA and 50-day got sliced through. That was a top tell. I don't know how long it's going to last, this slight correction we're in, but we got the signs right here. Today, this is like my ultimate red flag is when the 50-day crosses the 21-day. That every single time that happens, like every single time, my buddy Kevin Green mentioned this actually just in the call before, he validated it. It touched the market touches the 200-day every single time this happens. So clearly you're seeing right here at this crossover, the 200-day is all the way over here. So yes, we do have room to dip even more, especially if next week we have a major catalyst next week, which Austin and I will go over the earnings for next week, like in 15 and 20 minutes. But that's a catalyst for us for potentially bounce back. But if it doesn't, we're going to test this 200-day moving average. And if you guys remember last week, I said that we're going to hit 480. I really do think we're going to hit 480 because my favorite tool is the VWAP. The VWAP from the October bottom, the beginning of this rally, I was like, we're going to touch this. I do think that's our next test is the 480 level. I really, really don't think that. Hold on, let me see. I don't think we're going to hit 465 just because we have a massive volume shelf of 475.
Yeah.
Like I really think we're going to hold there. But that's our next levels. It's 480, 482, 475, and then 465. I really don't think we're going to slice below the 200-day, but who knows? Because next week's earnings is the catalyst for which direction this market is going in. Because right now, it's actually in the middle of no man's land. It has no trend. It has no characteristics. It's finding its own identity right now because this is something we have not been experiencing in this market for like 7 to 8 months now. And it's got to pick a direction. And there's so much geopolitical noise right now that's happening that nobody wants to put their money in the market over the weekend because who knows what's going to happen next 2 days. Like the world looked completely different just 2 weeks ago. And now it's just like momentum's carrying where it feels worrisome. And there's like actual fear in the market. And there's been a long time since that characteristic has actually entered the market. What do you think about that, Aus?
I'd agree. I mean, I think the fear and uncertainty is warranted, but also I think it's important that the point you just mentioned, this is a new It's like, I get it. It's been around forever, but just like you get regime changes when countries rise and fall, the dynamics of the entire cultural infrastructure change. Everything about it changes. The things they do change. The people in charge change. The objectives that they have change. The same is true for the market. Regardless of the S&P being in effect for 100 years, it doesn't matter. Doesn't matter because we have not experienced the environment in which we find ourselves in now, right? Money has never been worth as little as it is now. So that's number one. It's the kind of argument that I've always made of like, has the SPY really gone up? When you think about it, has anything really gone up? Or have we just found a new way to kind of like pump fake everyone? That's something that's a little more conspiracy in the back of my mind, but we're experiencing currency debasement, right? And we know that's gone on forever. That's a problem, right? Ever since we repealed a number of between Glass-Steagall and we removed all barriers like banks, everyone, hey, let's all play together. That was a huge problem. The revocation of the gold standard, huge problem. Like we untether ourselves from like true value, we put ourselves in a predicament that no one's going to really understand the law of an unintended consequences. And that's what we find ourselves in now. So let's just throw in the couple other, which I would argue are minute compared to the things we've mentioned, but are not small things, which is like war is breaking out overseas, right? I believe Israel just bombed Iran, right? I mean, that just happened. Jesus. Well, there you go. So there's uncertainty, political instability. War is the most profitable business in the world, at least for the United States. You're going to agree with it or not, it is what it is. So there's opportunities there. I mean, that's the way to look at all this. It's hard to detach oneself from the personal element, but to look at the market for what it is. There was a pandemic in which I don't know about you, but I thought, man, I might die. I didn't know. Yeah. No one knew. Like, oh my God, am I going to be trapped in this house forever? No one knew, right? And then get into Ukraine. That's a whole separate thing, right? Like we've kept Russia at arm's distance. Russia finally says, hey, I'm going to play with everybody. I'm going to play nicely. Russia brought its basketball to the game, man, said, I want to join NATO. Let me in. I'm ready. I'm finally here. And you know what everyone said? They popped his ball. They laughed at him. And what did they think was going to happen? He told us, don't touch, don't come to Ukraine. Don't touch it. So what happens? We go to Ukraine. And I mean, these are a series of geopolitical things. These are a series of economic things. These are a series of health related things. And not to mention, like, no one understood the scale and pace of technology. You can't, because it's new. Like, I think we're at a place right now, which interests me the most to talk about with you specifically, is like, is there even a way? I mean, I get it. We can predict based on earnings and like cash flow predictions, blah, 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 blah. But we're in an environment in which I don't think we can understand the impacts of certain things that are happening. And
nor do we want to. That's the
Yeah.
thing. Like, ignorance is sometimes bliss. Like, and we're in a type of market where the con always gets matched by a pro, where it's so even keeled of like, there's mass fear, obviously, with everything that Oz said, but there's also trillions of dollars in the sideline. And the hedge fund managers I talked to in my channel checks on the pod is their buddies are just waiting for the dip. Like, they're going to buy the dip. They're just waiting for it. So that in the back of the head, and then again, the election end of the year, there's some political manipulation might be at play. So that's the thing. That's like, if this happened next year, like this is 2025, I think it'd be a far different story. I think it'd be much more aggressive. And like what Oz was saying, like it could be a lot uglier, and like there could be things that are holding up the market right now. Oz, do you think we should start talking about? Should we talk about Netflix at all? Because I know Netflix a massive move today.
Yeah, and I think there's a few that are worth talking about, and I would say in this order. It's like Netflix, number one, Amazon, number two. We can expect earnings, I believe, the 30th, so that's coming up. And then number three, which is Nvidia. I think a lot of people are wondering where do we go from here. So let's start with Mr. Netflix, which big fan. I own a lot of this stock from $200. I think it was a no-brainer. And it's a long and strong for me. I think when they started developing content in-house, it made sense. We have some pretty solid trend strength, I would argue, from a technical perspective. I think that's what we'll start with, and then you can dive in a little more on what you're seeing from a fundamental cash flow and growth model side. So as your specialty. But, you know, we had our bottom in May. Like, we had a ridiculous – it's a capitulation. I mean, that's nonsense right here. You guys could say that nothing should ever move like that. We are not, and this is my opinion, I don't think we're in an efficient market. If we were, this wouldn't happen. That's madness. But nevertheless, it is what it is. These are the opportunities, like he just mentioned, where smart money's waiting with their mouth watering, dripping all over the floor to buy opportunities like this. And you can see it. Huge institutional buying came in, right? Now they've 3x their money in less than, what, a year and a half, 2 years? I mean, that was a no-brainer. And you have these massive moves to the upside, a lot of them positioned around Netflix growth as a company, which I do think there is some accurate reflection here. But, you know, the subscriber thing, like that was massive. I mean, it pisses me off every single day. Like, I'm still trying to fight the power, sharing my password with my sister and my dad, and you got to text like 4 people to verify. It's a nightmare. It is a nightmare. And I'm getting to the point where I'm about ready to just get my own account and stop being so cheap. So they were right and they won, and I can't argue with that. So I think that growth really was starting to get priced in. We were trading in the 350s, 400s. I think we're getting a little out of control now, and I think that we're in for a little topper here. But we have significant trend strength, and I guess to front run on earnings coming out, which is was the 15th, right?
Earnings was for Netflix?
Yeah.
Yesterday.
Oh, it ended up being it was a week of the 15th. So my bad.
Yeah, so that's why
they're down the reflection you're
today.
seeing. So we price in all this future growth, right? But in my opinion, we should have stayed trading below $500 before this even got here. This move was stupid and unprecedented, and it shouldn't have happened. I think it's more of just a liquidity play. If you go back here, and these are more just like market dynamics, I guess to understand. We've got a few big, strong moves. I mean, we got like a nice little liquidity zone. Oh, ignore that last one. We got a nice little liquidity zone pretty much between 450 and 550. And so we flowed right through it. Should we have? No. What I would have liked to have seen is a little bit of a sell-off and a little bit of consolidation here. And I don't think that this earnings would have been represented as such. I think we would have maybe seen a move down to 460, 470, but we would have seen a lot more stable chart. So those are my thoughts on the technical perspective. I just realized that you've been sharing your screen and all of that drawing I was just doing was for nothing. But I'll let you go for here. I thought my screen was on there. So
my bad. We should communicate better. We're learning. What you said, you nailed it. So this expansion is here, right here. It's a margin expansion story. Why is that? It's because I think it was 2 or 3 quarters ago, it was like towards Q3 of last year, they officially won the title of King of Streaming, in my opinion.
Yep.
When they did the password sharing and how sticky the churn was, it was like 95% of people stayed.
Yep.
They increased the prices, they tested the loyalty of their customers, and it worked. And it was validated that they're the king of streaming, and they finally have a moat, like an actual full-on moat. Similar fashion, Tesla has a moat in the EV space because of their charging station, for one, and that there's many components on why Tesla's the best. But the supercharging station is that's a moat for them in the EV space that nobody can really compete with. That's what Netflix did for streaming. There's a lot of noise on Paramount's Peacock, HBO, Apple TV, does Netflix have an actual mode, or is it a commodity play? I thought that was absolute BS when that got brought up, but that got brought up. And we're clearly seeing that they have a moat. Now, the biggest question was, why is the stock dipping 10% today? It's because forward assumptions got pulled up so quickly and so aggressively once the moat got validated that the stock got ahead of itself. It happens all the time. Just because it's dipping 10% doesn't mean their moat is diminishing or your thesis on the company is eroding as we see it right now in our face, right now down 10%. No, it's now the price needs to start catching up to their fundamentals. Right now, Netflix isn't cheap on the fundamental basis. They don't really have free cash flow year-over-year growth as it was a year or two ago. The year-over-year metrics is very tough now. The revenue growth, low teens, it's great, but they might be in a position of transitioning from growth to value. And when that transition happens, you get out, in my opinion, because the valuation of that, whatever multiple you want to value growth, is so different than value, what the value would be for a value stock. Right now, they're in that awkward middle period of what's their next growth stage in the company? Is it gaming? Is it live TV? They just had a WWE partnership.
Let me just really quick, because I think for people to understand what you're saying, keep going. What he's basically describing to you is that there's 2 ways to look at it, right? There's food that looks absolutely beautiful, and there's food that isn't that visually appealing but tastes delightful. That's what he's describing here. The food's the same either way, but are you going for taste or are you going for looks? You evaluate that in a totally different manner, and that's what he's describing between, are we looking at explosive margin growth, tech play of the future, or are we looking fundamentally value-wise, is this customer base going to stick and stay and the future of digital growth in their hands? Will it provide a sustainable business model to continue to churn cash for the next 30 years? Go ahead.
That's 100%. You nailed it. So that transition takes years. And a lot of times the reason I'm not saying sell it because the stock's going to go down. It just won't go anywhere potentially. This might be trading between 500 to 600 for at least a year. That's totally the case. And
that would be good. I would prefer
that would be good. You want that. But at what point do you hold your money in that for opportunity cost when Tesla is getting down 40% this year and they're going to be a monster, in my opinion? Or there's just so many fire sales, snowflakes on the fire sale. At what point is do you capture this growth of year-to-date gains you got from Netflix for the past year to transition that money to somewhere else? There's a disconnect between stock price and business execution, which is Tesla and Snowflake. That's what we're seeing. So that's a better opportunity cost, in my opinion.
In taking advantage of market dynamics. I mean, that's the whole thing is you got it's a constantly evolving equation in which you can really pinpoint 1 or 2 variables, but you're never going to have a stable set of constants. It has to be you. If your constant is, I'm looking for, and this is what we always talk about, trading plans and understanding your thesis and what drives your thesis, right? Are you a value guy? Are you a quick fix guy? Are you, short swing options guy? Are you an earnings options guy? What makes sense? I think, and it's a different different topic altogether, but like based on who you are as a person, how do you best understand this? Like, do you see the really explosive growth stories very clear and apparent? Is that a language you understand? If so, that's the only place you should train your eye to look. And that's what I think he's alluding to here, is that if your play here isn't like, I feel the safety in this transition to value, and I think this is a stable place to park my money, whereas I might not see the upside that I'm going to see elsewhere, I do have the confidence to say my money is safely placed here. If that's your perspective, then ride the wave, baby. You're in. It's a good name to be in if that's what your incentive is, in my opinion.
Mm-hmm.
Now, if your incentive is like most people that are, our age, under 35, 40 in the market, between 20 and 40, and you want a nice, I guess, you want your portfolio to have the right disposition, right? You don't want to just be focused on, I want this explosive growth, because your drawdown is going to be so much you won't be able to stomach it and you start puking on your shirt. You don't want that. Or you make a hasty decision, sell at a loss. You're me with Caterpillar mid 2020. One of the best names you could own. I panicked like a dumbass, and I sold a very large, very profitable position that has since doubled. I didn't understand my own thinking and positioning when I got into that trade in 2018, right? I went into it as, there's value here, and this is a safe and stable place to park with consistent but predictable growth. I should have held on to that, because that's what the company is, right? But when the thesis itself and the strategy were disconnected, I made a critical error that cost me. So I had 65K. That cost me about 70 grand of like worry-free money. I would have had to have done nothing and paid a dividend. So I did what I did. But I guess that's a good segue to then go into, like, when you're looking at this as a value proposition, if your angle is growth and underpriced opportunity, that's when we need to change the conversation to, okay, this was great, Netflix was fun, but I'm not looking to get married. You know what I mean? And that's when we, I think, start to take that look at names like Tesla and Snowflake, which, mind you, actually, let's start with Snowflake, because I do believe it actually hit I turned off my price alerts on that. I need to flip over there. I do believe it hit it hit my buy zone number 1. So look, guys, we had these, God damn it. We had these perfectly mapped out. So buy zone number 1 has engaged. That's 145.50. So this one I put in my brokerage. So I'm assuming I actually need to ask him, because I could see him not following through on this. And buy number 2, and that would drive me insane. Buy number 2 is priced right about 130.
So Snowflake, we can transition to earnings next week, kind of.
Yeah.
Snowflake's gonna be a Wednesday. Is gonna be Wednesday and Thursday, I guess. Massive days for Snowflake next week. Why is that? You're not reporting earnings. Azure and Google Cloud is reporting earnings on Thursday. So that is the first glimpse on what business spending has been like the past 3 months in the enterprise space. So if you know Snowflake, they're essentially a data warehouse company, but they all have a ton of AI components within it. So that's why I think they're a direct beneficiary of AI. Regardless, business spending, like, it obviously bottomed 2 or 3 quarters ago, but everyone got front-loaded expectations on, we're going to see a direct benefit on AI right now for names like Snowflake, MongoDB, Confluent. Like, these names, like, clients are like entertaining the thought of AI, but they're not clearly using it yet for like the levers that Snowflake would want them to use to pay up. So that's the first glimpse of, like, Thursday next week. We're going to see Azure, Google Cloud, like, what's the business spending like on the cloud. Snowflake always moves a ton within those earnings, just because they're a consumption-based model. So they make money as long as their clients spends money. And if business spending is getting worse, that's not a good news for Snowflake. But if it's picking up and there's like an inflection point on business spending on the AI space within cloud, that's going to be a game changer for Snowflake stock price action. Like, that's going to instantly recover the 150, no brainer. But I think it's going to propel it to close to 200, because it's universally known they sandbagged their guidance. Like, it's universally known that. So I think Snowflake,
that to those that may not understand what that means.
Okay, so perfect example is, let's say, all right, so they have a new CEO that came on, Snowflake. So he's never been really a CEO of a big company like this, but doesn't mean he's some schmuck. He was on a short list to be the new CEO for OpenAI after all that Sam Altman drama. And he managed like a multi-billion-dollar company within Google. He's like an absolute goat on the product front and AI front. So he just joined the company just last quarter. It was announced. That's why there was a big gap down. Frank Sluman's retiring. He's a goat in the sales enterprise space, but he's not really an innovator. So besides that point, the board of directors wants the new CEO just to focus on product and go-to-market products and how to innovate their AI products to actually make it more applicable for the clients right now, not a year or two, like right now. In order for him to focus on that, they want to make the expectations for all the shareholders, investors really, really low because he'll 100% beat it. He doesn't have to worry about appeasing the shareholders or appeasing the board because they put such a low bar for him to beat for this year that he can just focus on the product. And that's very normal practice in the corporate strategy world and enterprise space world. And generally, it is the opportune time to start a position when there's a kitchen sink quarter. Like I forgot there's a statistic out there, but like it is like more often, like a lot more often than not, a good time to initiate a position. And Snowflake, I'm like anecdotal evidence on 3 different industries I've worked in my corporate strategy career. That will be a monster company.
Right.
And you're going to see the direct AI benefits of it very soon. And when you do, it's going to be too late because they are the bell of the ball in the enterprise space. And that's why they're priced like 100 times sales in IPO. Like that doesn't happen. That's a unicorn valuation at IPO. They haven't really recovered from that, but that just shows the appetite that a lot of hedge funds and a lot of like the tech guys who know actual tech know how revolutionary Snowflake is. So that's like the first pulse next week on seeing like how's business spending in the cloud. And that's why I'm watching. I don't know. Do you have any thoughts about Snowflake, Os?
Well, the question I was going to ask is like, so what kind of spending do you need to see to then, I guess, really for perspective to shift that, hey, value's here. I guess we're looking at a brighter future. And would you say that is that just simply one quarter out? Or do you think that spending is going to dictate what we're going to be seeing over Q3, 4, and then again, 1 of next year?
So I'm part of the belief where once the clients see the real ROI in AI, it's sticky. They're not going to go away from it. Like you guys all have witnessed ChatGPT in your lives. You tried it. You can't live without it anymore. Like you go on that for your Google searches, your Grammarly used to be a big one, but now you just go to ChatGPT as grammar makes sense, etc. That's how clients are going to feel on AI within like the data structure where they know all this data is in the Snowflake ecosystem. They don't really understand how to utilize that data for their own efficiencies in their own products within their own companies. AI will pretty much hand it to them. Like, this is what we recommend. And this is what we're seeing the trend wise. You should probably use this as your basing point on your next conversation with leadership. Like, how should we change this trend? How should we double down on this? So seeing quarter over quarter growth, like incrementally added, that's what I'm looking for. So example, business spending for Azure, let's say it grew 15% quarter over quarter. If it grew to 16 to 17%, we're seeing an incremental momentum in business spending. If we see a decline of less than 15% or it's lower, okay, so clients, maybe they're not optimizing spend, but it's definitely not picking up like I thought it would for AI. So like that's what I'm monitoring specifically. A good call out, the best call is AWS, but they're not reporting next week. But Azure, I guess, is the second best. Another one, great one, is ServiceNow. So ServiceNow is always the first SaaS company to report every earnings cycle. They're always the first one. So they're reporting.
Now ticker
Now,
NOW.
yeah. So this is Frank Sluman's previous company before Snowflake, who's CEO. This is the best of breed software name. Like they will always produce 35% free cash flow margins. They'll always be growing the mid-teens. I've communicated my favorite growth metric to use is Rule 40, which is combining revenue growth plus free cash flow margins. They qualify as elite status every single year. They're cemented in that section, and they'll always have a premium because of it. So they're going to be the first SaaS company to report their earnings. So that sets the tone of like Should we be worried about other stocks, or like, do we see any kind of pickup in business spending, like I mentioned, or is there additional churn within the tech space? Who knows what signals they're going to provide, but it's always a good pressure test. So that's what we're going to see on Wednesday. I mean, look at their chart. Like, you can just see their chart. They're just one of the strongest companies. They rarely have a pullback, if any at all. They're just constantly getting bought up by institutions, even retail. Like, they're just so elite. And that's why fundamentals matter so much, because if you have those elite fundamentals, like the Rule of 40 score elite status, you'll always get scooped up first on any kind of macro driven pullback. You'll see it in this name. You'll see it in NVIDIA. You see it in NVIDIA before today, but like, you'll see it in NVIDIA. You see it in Viva Systems. Like, you'll see it in CrowdStrike is barely dipping. Like, yes, they're down. Like, they're at 280, 290, but like, they ran up a ton. So like, these names always get scooped up. So fundamentals matter a lot. Going on the CrowdStrike, like, now they're showing it. CrowdStrike is a little worrisome in the near term. However, I'm not worried at all. It's my number one position, 15% of my portfolio. When I started it, my average cost base is in the 120s. So my initial thesis in this company was they will be the all-in-one cybersecurity platform for enterprises. Yes, that is a massive, massive sentence I just said. But if you notice their progress year after year, the modules that are getting adopted by their clients, like, it went from like, how many clients are using 4+ modules to now they're going to be showing 7+ modules. Like, you're seeing everything get put together for CrowdStrike. And I made a tweet last week that did not go well at all. I didn't realize how many people I angered for Zscaler fans, but CrowdStrike's worth like 75 bill. Zscaler, which is an absolute best of breed cybersecurity name as well, they're worth 20 billion. That combination, if they merge, game over in the cybersecurity space. That is the final nail in the coffin of CrowdStrike will be the cybersecurity play for all enterprises. I'm not saying it's going to happen, because the CEO for Zscaler is young. His name's Jay, and he's a great CEO. It's just the reason Zscaler is suffering is because they had a weak billings last quarter, and Palo Alto is scared a lot of the industry off on their earnings report. And CrowdStrike was the only name in the space to actually grow and like beat expectations, and like, they actually called out in their earnings report. We're not seeing what Palo Alto called out. Like, we're not seeing any weakness. Quite the opposite. We're actually seeing some strength. That's what you want to see in a mini monster. And this is what, like, everyone wants this stock now in their portfolio, because they're the clear tier 1 cybersecurity play. Tier 2 is Zscaler and Palo Alto, but like, they're the CrowdStrike separated themselves from everyone else. We saw that similar fashion with NVIDIA 2 years ago, like, separated themselves from other semiconductor plays, because like, we're seeing some direct impact from AI. GPUs is going to go bananas in the data center. Like, that, if I want to be exposure within that thematic, I'm going to use NVIDIA, because you want to go for the best of breed king of any kind of themes. CrowdStrike is that for cybersecurity. And when the market pulls back like it does, the fight to safety will always be the best of breed names. You don't want to lose your exposure within the theme. So I want cybersecurity theme, CrowdStrike. If I want semiconductor exposure, NVIDIA. If I want data exposure, Snowflake. Like, be specific, because you, in this market, like, it's tricky catching a falling knife. I threw a lot of content out there also. I'll pass back to you.
Yeah, I think that kind of moving over to NVIDIA here, I mean, just big downside. I mean, to see that kind of flush from 9 to 760, that's tough for anybody to stomach. And I know that the fear is definitely apparent in the market. I mean, from a trend strength perspective, you got quite a ways down before you really find it. I think the real question here is basically, you know, what can we expect to see? I think that's what a lot of people are wondering with NVIDIA. Like, okay, it ran so much. And is this channel going to be the channel that we're going to live in for a little while? Because, I mean, this was the attempt at breakout. And, I mean, again, come on, keep in mind that from when I bought this back in August of, what was it, 22? Yeah, August, November of 22, it was trading 150. We're trading 5-6 times that. You know what I mean? So I think that it's important, as you mentioned, to understand that, like, look at how far we ran up. Like, this isn't saying it's the end. It's saying this market is not going to sustain this stuff right here, right now, any longer. At least not for right now, not in this moment when there's this kind of, I guess, uncertainty. Again, inflation halted. Is it running? Are we stopping? What are we going to do about rates? Like there's pause. Nobody knows what to do. So it's going to see that. I think it's going to see that kind of contrition there and their contraction in terms of price. And then it needs to find consolidation because, again, we're way beyond a fundamental valuation right now. This is like a wild market just saying, fuck it, let's trade it and see where it goes. You know what I mean? So I really think that looking forward, it's risky to buy here. But I will also say that from the perspective of could this be a short-term downside before one more little bit of strength? If big money does come off the sidelines and buy, when is opportunity to buy? I don't think it's today, just being honest with you. I think that we got some balance here. If we can find 700 and stick and stay, then we might have something to talk about. If we see a quick snap back up and we can reclaim 800, even better. I would argue that's huge strength in terms of price. So from this point forward, I would say that NVIDIA is going to be dicey, and it's really just going to matter how the next couple days pan out. I think maybe in the next 2 weeks. But I think the next 2 weeks is going to really give us a good look at what we can expect, in my opinion, for the next 3-4 months. Because remember, markets, we're going to be getting into the summer here. Markets going to cool down. Some more money will step to the sidelines. In most cases, that's what we can expect. So I don't think it's going to be as hot as it has. Because remember, it's also driven by the retail interest too. And that's like a big, 30 to 40% of the market chunk that was never really factored into any, I guess, market pricing models at all until the last 4 or 5 years. So again, we're still in a new market, in a new environment, in a new era that I don't think everybody or anybody really understands.
We're also do you guys really think this AI theme is towards the end or the beginning? We're only in year 2 with NVIDIA's earnings expansion. We're just getting started.
Right.
And the way that NVIDIA's innovating every 6 months with their Blackwell chips that they just announced, they're not letting their competitors like Intel, AMD even have a chance because they're innovating so quickly that Blackwell, fine, great. AMD is innovating on their 300 chips. By the time they're going to get to the market, NVIDIA's going to innovate the next thing. It's going to be too late. NVIDIA's playing chess when everyone else is playing checkers. So knowing that, I'm buying I have a limit in 750 actually. So I'm wondering if it's going to hit after hours right now. But I am participating in the NVIDIA. I'm probably going to initiate a trade in that just because if you look at their weekly charts for NVIDIA, their RSI has been overbought since January 8th.
Oh, yeah. It's madness.
So they just yesterday or 2 days ago finally went out of their oversold territory for the RSI in the weekly chart. You would not think that if you saw the way the sentiment is on NVIDIA right now on FinTwit. So this is returning back to the norm before the party continues and roars back. I wouldn't be surprised if we hit all-time highs in NVIDIA sometime this year again. That's just how the market psychology works, where something aggressively comes on the downside. They forget all rationale and why it was becoming such a massive winner the past year or two. So knowing that, I promise you, people are going to be like, oh, I should have bought it in mid 700s. That was my chance to get in. Start DCA. If you want a 5% position in NVIDIA, start a 1% position at 750. Do a DCA every 1 or 2 weeks until you build it up, get more comfortable, and see the price action. Because what happened the past it's actually 4 straight weeks of red candles for NVIDIA.
Yep.
That's, in my opinion, that's shocking actually to see. It's character changing on their stock price, the way it's been acting. But it's pretty, if you look at the price action from once it broke 500, it just went straight up to 1,000, no resistance, all green candles in the weekly chart. That's unhealthy. Yeah. We're just normalizing it right now. So because of that, fine. I'm going to slowly DCA it. However, be very cautious on the semiconductor space because the way the pricing power works in this AI revolution within the semiconductor ecosystem, it's a game of hot potato of who has the pricing power. It started with NVIDIA, and we clearly saw it with Micron, MU, ticker MU, on their earnings a couple weeks ago. So now, which they handle the memory element of the chips. You absolutely need that within chips. Like it's like one thing, part of it that will never go away. They have the pricing power now. So that's the way it's like, all right, I started off. Now you have the pricing needle. You have the pricing power. They're going to see earning expansion, margin expansion. Like they're going to be, this is a great buying opportunity, to be honest, in Micron, because they're just getting started on the pricing power they have. Who knows how long that'll last and what the next phase of the pricing power will be. I specifically think it's going to be the network elements, where it's going to be the Broadcoms or the Marvells. They're going to see the next pricing power needle, but I won't know when that happens. But Micron validated in their last earnings, it's happened for them. They blew the waters out where it was like, it used to be single digits % of the revenue, the AI. Now it's 30%. Like it was a massive, massive change of allocation part of the revenue picture. So they proved it. So be cautious on it, because AMD, I love their story. I'm very interested in AMD under 120, because I think there's so much space for NVIDIA and AMD to succeed. Like AMD isn't just a GPU player. Like everyone forgets, they're a major CPU player. And like they took a lot of Intel's lunch just a couple years ago, but everyone's focused on AMD and NVIDIA because NVIDIA is like the golden child, and you're clearly seeing they're printing cash and growing their top line revenue by triple digits at a $2 trillion valuation. So of course they're comparing AMD to NVIDIA, but AMD is a great player. It's just, I don't know when they're going to get to the table. And NVIDIA has such a head start and such a first mover advantage, and their tech is superior to everyone else's, that I'm wondering if anyone will ever get to the table. I think NVIDIA's bear case is they're obviously going to lose pricing power. Like it's inevitable. But I think they're cementing themselves as an ecosystem, like they're center of all these different industries that are going to be utilizing their software, their chips, that they will always be there in a similar fashion, where Apple's cemented in all consumers because of that App Store ecosystem and their iPhones. That's what NVIDIA is like in the digital economy. So Apple is like that in the consumer economy. NVIDIA will be like that always in the digital economy. That's how you have to think of it. So yes, the valuation multiple for NVIDIA might start changing, because you're going to see their earnings decline year over year. Eventually, they're going to lose their pricing power. Their margins will never be this high. Like it's unheard of what their margins are right now. It will never be this high again, but doesn't mean their business is dying off. It's similar fashion in Netflix. Their valuation is catching up to their stock price, and that's totally healthy. You need a consolidation. And I don't think NVIDIA is there yet at all. I'm just talking like 3 to 4 years out. I still think the NVIDIA story is just starting, which is fucking nuts to say because of the monster move they've been on. But that just shows how revolutionary the AI tech is for the chip industry. And they're the king of the chip industry. So I think if this is a baseball game, I think they're in third inning right now of this game. And until they get to the 7th inning stretch, which I've seen no signs of, that's when I will take my gas off the pedal and I'd pull back a bit and maybe be more forward looking, which I think is the application element, like the software space. And we're not even there yet. So I'm going to see facts that the party's going to stop, the music stop. And I haven't seen that yet. This is all just sentiment assumptions, and I'm going to be participating.
I love it. So let's move on to the one that everybody is interested in hearing about. Thessalonius Jackson. More downside, but downside or buying opportunity. I think that's the question here. I'm loving the long-term trend strength because we can date that back to 2019. Like I love a good flip of the pivot. So trend resistance, right? And smaller price action, but bigger relative volume. Once it flipped, that was our breakout, right? So that's basically when bears no longer had any control at this, I guess, point of pivot. And that will also always carry with the price of the stock in my experience of trading, right? So as that pivot's over, that shows us. And then again, anytime, guys, you have a thesis or strategy, like you need to be able to validate it. There's your validation right there. So the assumption was pivot would carry with price appreciation. So we extended out and then boom, January 2023, the pivot carried, bulls retained that, I guess, level of power. And then they confirmed what we thought. Now, the question here is, will we see yet another confirmation, or are we going to see a violation, and are we going to see new price action emerge? Personally, I think we're going to see another confirmation, because this sell side isn't enough to convince me that like they're really done. Like, it just isn't. I mean, I understand, like, I could see the bear theme starting to emerge, because it's always, look, you have staunch opponents on both sides, right? You have the perma bears and the perma bulls, and then you got this larger swath of people that sits in the middle, and they are, I guess I would say, your less seasoned investors, your less thesis driven investors. They're more market sentiment, make me some money now, short-term thinking kind of people, and they're often the loudest. The squeaky wheel gets the grease. So I think the question here is like, do you think, this is my question to you, do you think that that's all we're seeing is the squeaky wheel getting the grease, the panic sellers coming in, the people who thought, wait, I thought I was going to go to 300 and I was going to make, infinite money because NVIDIA ran and I missed it because I didn't listen. And now I thought Tesla would be it, even though I'm buying it, virtually just non-existent price points that you should be buying at, and then looking at the chart going, well, what the hell?
So remember we just talked about Netflix transition from growth to value.
Yeah.
Tesla is a completely different company than it was 4 or 5 years ago. So the investors who invested in it back then, it's a totally different company than what investors are going for right now. For me specifically, I didn't own any Tesla until Q4 of last year. I was a late bloomer in Tesla. Why? I wasn't interested in their EV space as much. I'm an AI software investor. I like growth tech, EV, high capex. It just doesn't excite me. Like, who knows? Like, it just didn't do it for me. I saw the FSD technology and I saw the inflection point. I was like, wait, this is not an EV play anymore. This is more of an AI software play. And I think right now, you're seeing what Elon's doing, transitioning the whole company, the layoffs, his whole priority. Like, he's in full on wartime CEO mood right now. And that's what you want in Elon, because he's a fucking goat when he gets in that mode. But he's going full on AI, robotaxi software space. He's tunnel vision in that. That's one of the reasons I invested in Tesla. So because he's doing that, and that's why I'm interested in Tesla, I'm happy with the way the stock price is reacting, because the investors who are leaving right now is because it's transitioning to a totally different company and they're maybe not comfortable with it, or it's too risky, because it is very risky what he's doing, just like betting a law of the company on this like robotaxi AI software component. But I want that risk. I love that. I see the vision like he's seeing it, where this will be insane if it works. But the risk tolerance for a lot of investors, it's too risky for them. So they're bouncing. And combine that with everything that's happening in Tesla stock isn't a Tesla issue. It's an EV industry issue. And we get that proven with every single earnings report this year, this recent cycle, where we just saw TSM, Taiwan Semiconductor, who essentially manufactures all the chips for everyone in the world. Like, they're best of breed. Like, that's another amazing name in this semiconductor space. They showed weakness in the auto sector, and that's why they sold off. That validated again on the EV industry. Like, you saw delivery numbers from Tesla. You're seeing NIO in China just like they're like $3 stock again. BYD is like suffering as well. Like, everyone in the space is suffering. And Elon might know like the recovery might take longer than expected, or like, this is not like what I want the jewel of the company to be around. So I'm going to start pivoting and start like focusing on like the next gen platform that he's going to reveal on 8/8. But I'm just going to focus on that. And EV industry can recover, but it probably won't, because rate cuts are only going to go maybe 1 to 2. But like, I would put my money on 1, and we'll tell in July if that happens. I don't think, if it doesn't happen in July, it won't happen this year. But knowing that interest rates will stay higher for longer, EV space is going to take like 2 years to recover. Elon doesn't want to waste 2 years of his life on waiting for macro-driven or outside the company like making the environment better for his company to like actually produce vehicles, deliver vehicles, and like all that stuff. Like, he doesn't care about that stuff. He wants the revolutionary thought, and he's going towards the AI software space. Totally fine. We're not going to talk about the shortcomings of delivery numbers every quarter in 5 years. We're going to talk about
Mhm.
it's like everyone, like when Amazon transitioned from the bookstore to like AWS or like their e-commerce, like everyone's like, that's so risky, blah, 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 blah.
Yeah.
Are
I
you
just
kidding
don't
me?
see a market for it.
That's what's happening right now. Where like truly revolutionary ideas that are just highly risky, people always will count against it because it's out of their comfort circle. And some reason they all think they know better than Elon Musk, who lives in this space and is an absolute genius. But sure, fine. Bet against Elon Musk. Go with your intuition that you know nothing about because you're a Joe Schmo working a 9 to 5 and have no exposure to what Tesla's actually doing behind the scenes. But sure, you know more than Elon. So, in my opinion, I'm like, if you told me a year ago I would have the chance to buy Snowflake under 150 and Tesla under 150, I'd be like, hold the boat. Let me get sell everything I have, and I'm gonna put my money on those shares because that's an absolute no-brainer. And that's what I'm not selling everything, but I'm putting all my DCA into those two names. And the simple question you have to ask yourself for Tesla, they're at a what similar price they were at 4 years ago, maybe 5 years ago.
Yeah, 2020.
Yeah, 4 years ago. Ask yourself, has their moat expanded?
Yeah.
It's an absolute no-brainer. It has. Like, not even a question. It's a clear expansion, but you wouldn't be able to tell in the stock price. That alone is a freaking deal. That's like, okay, you're giving me a fire sale on a company that I know will be here in the long run. It's just everyone's feeling uncomfortable with the transition they're going through as a company, and I don't know how to value them at all. Fine, but I know I'm telling you, if FSD becomes as sticky as what I think it will be, they're going to start having an insane earnings expansion story. And the headwinds that they're experiencing this year will quickly become tailwinds for them because those year-over-year comps will be so much easier to beat. And now, all of a sudden, a ton of investors are going to flock in, and the stock's going to be what, 250, 300. And they're like, all right, well, it's going to go to the moon. I don't care about like
Yeah.
waiting to 250.
They
I
won't
want to
buy now, but you better believe they're going to buy right here when we top at 268 and reach our next real marked level of
That's
resistance
how it is.
from this.
I
And then they're
rather
going
be
to say, I was right. This is garbage stock.
and the way Austin and I work, we rather be first than last. Like I want to
Right.
be, I will take the pain. Like my growth portfolio made 87% last year without owning any Mag 7 name. Why is that? I added like a madman in the second half of 2021 when the water was bloody filled with blood, everyone fearful of like software names are going to lose their valuation. They're super high, expensive. Like, do you understand how the unprecedented pricing power that these software names, best of breed, will have in 5 years? You have no idea. So I will be adding like a madman right now, be the first one to do it. And once it recovers, fine. Everyone wants CrowdStrike at 250. Nobody wanted CrowdStrike at 100. I did. Nobody wants MongoDB at 350, 400. I wanted it at 140. Like, be the first. Time will always be your asset in this game because if you're a long-term investor like I am, and like Austin is, time will tell us all. Like, if you made a good investment, market goes up.
Yeah.
That's how it.
Call
That's
me a
how it's
loser
built.
all you want. I just want the check.
Yeah, sure. So,
Well, as we're getting there, we got about 2 minutes left. Final thoughts. NVIDIA versus Tesla versus Snow as far as the buy. And I'll just tell you my thoughts quickly because we just discussed them. As far as short and long-term upside, my votes to Tesla because I again, with this critical theory needing to hold in which the pivot is flipped and the bulls have basically said this is our line, we will go no further. As long as we hold there and we see similar or greater volume than we saw back in early January of 23, I'm sold on it. That's my upside. That's my 5-year 5x kind of trade. What's yours out of those three?
Snowflake.
Yeah,
Just because Snowflake doesn't have the macro-driven impact that Tesla does. So I do think interest rates will have a heavy role in Tesla's price action. Whatever they do on the AI software FSD space, they won't see any returns in their investment until like probably end of 2026 at the earliest. And I just think the way the market works, it's forward looking. Nobody knows how forward looking it is. It could be 6 months, it could be a year, it could be 2 years. So whenever they get a glimpse of the FSD earnings, that's when the Tesla's going to explode. Nobody knows when that's going to be. Maybe the 8-8 event is going to be revolutionary. It's going to provide this next gen platform. FSD accumulated those 6 billion miles that management wanted in order for them to feel comfortable with scale. Who knows what it'll be? But I do think interest rates are going to be a heavy, heavy headwind on the company, on the stock for like next like 3-4 months. But again, like Austin has like a long-term horizon. Who cares about 3 months? But for Snowflake, the reason if I had to choose one, like it's truly a Sophie's choice because I love both of them. I do think Snowflake has the ability to bounce because it has held up a bit well. Like it is pinched that 150 price right now, and they have a near-term catalyst next week in Azure, in Microsoft, and Google, and even ServiceNow that they interest rates don't really matter to them as much because it's not a consumer-facing product at all. It's in B2B enterprise, and if business spending does pick up and like companies are laying off a ton of people right now, and everyone's running lean within their teams and orgs. Guess what they're gonna like not hold on to, but like what are they gonna leverage in order to like pick up the same amount of productivity and efficiency and like delivering the same amount of products and like whatever they had to before with less people? They're gonna use AI because that's gonna be the perfect crutch.
Initials are AI. It's all they got.
So because of that, like I know it's like these layoffs, like these are in a way tailwinds for like companies like Snowflake. It's the worst way to say it because people are losing their jobs, and I'm very sensitive to that. I work in the corporate environment. I see it right now. We just had layoffs recently, so I see the impact of it. But it is like AI is the best crutch on these layoffs for these kind of companies, and I do think
Whoever
the more layoffs you see, the more aggressive they'll be.
It's whoever can wield it best, man, at the end of the day. So that's your final thoughts. Thanks to everybody that showed up. We love doing this. I think this has really evolved, and this is the conversation that we need to be having. We're going to be here every week. We are going to be starting at 3:30 Eastern from now on. So that's 3:30 Eastern. Was that 12:30 Pacific your time?
Yes,
Depending
sir.
on where everybody's at. You can catch us here every week, every Friday. Make sure to go on Twitter, look up Stocks Heavy Shy, look up Penny Boys, make sure you follow us there. And you can get free access to Shy's private channels. Make sure you get them because we got something very big coming for you in the coming months that you're going to absolutely need to see if you really want to make that money. So, as always, I love y'all. Stay blessed.